The Morgan Report with David Morgan.
David Morgan of themorganreport.com. It is July 1st, Thursday. I'm going to do the weekly perspective a day early. And I'm just going to focus pretty much on the metals today. This is from a press release released and put on the Money Metals Exchange. Ohio becomes the 41st state to end sales tax on gold and silver. You can read the whole article. They make some bullet points here. Taxing precious metals is unfair to savers and investors. Gold and silver are held as forms of savings and investment. States do not tax the purchase of stocks, bonds, ETFs, currencies, or any other financial instruments. And that's true. And, of course, I'm in favor of no tax on precious metals. So you can read the whole article. It's probably been posted in other places. First article up is from Forbes, pretty well-respected magazine. Why Gold's Long-Term Trend is Still Up by Jesse Colombo. You're going to read this. Talks about where gold's been, shows you where it is currently. Gets some pretty good charting here and shows you the uptrend line. It hasn't broken that. Shows the long-term uptrend line. It's way above that. So I'll just leave it pretty much at that point. But what I want to point out is the fact that a lot of people are under the impression, okay, it's my idea that a lot of people are under the impression like gold hasn't done anything or silver hasn't done anything. But if you look back from the beginning of the gold bull market in the year 2000, over the last 2 decades, gold has appreciated 600%, the S&P 500 322%, and the Bloomberg Barclays Bond Index is up 157%. So gold has outperformed in the 2 decades, both basically the bond market and the stock market. So I think that's something to bear in mind. Yes, all markets go up and down, and it was really wonderful from the year 2000 to 2011 that we had 11 straight years of a gold bull market. And some gold bulls thought that would go forever. Doesn't. It's certainly done some correcting and some backing and filling, and now we're, as far as I'm concerned, up ready for the next leg up, which doesn't mean it can't move down to 1,700 and scare out people at the last moment and go from that level all the way up to who knows where. But I think it's important to take a longer-term perspective and also put it in the context. The compounded annual rate of return of gold for that time frame is over 10%. So yeah, if you held it through those thin years or for those, whatever it was, 6 years or so, you might be upset that gold's not doing anything. Well, it's consolidating, and it took years to consolidate. But the point is, it's a hedge. It's an investment that isn't your entire investment portfolio. At least in most cases, it shouldn't be. It should be part of it. And again, on aggregate, over the long term, taking all into consideration, it's up an annual 10%. Now, most financial planners that you pay or wealth managers will tell you they want to achieve 6 to 7%. So just gold has done better than that, again, over that 20-year time frame. So I do think maybe we expect too much. Silver's done not quite as good. The compounded annual rate of return for silver is somewhere around 9%, pretty close to gold. And as I think most of us think, silver will outperform in this final leg up. And of course, that remains to be determined. Another Forbes article, my friend Frank Holmes, known him for years, certainly spent time with him at the conferences. The gold is the ultimate contrarian investment right now. Yes, it is. We've gotten sold off here in the last several trading sessions. A lot of people are frustrated, as they should be. But nonetheless, again, I mentioned a moment ago, I think 1,700 is about as bad as it will get. It will be a third test of that level. In fact, the reason I know this is I just finished writing the Morgan Report for July. It'll be published this weekend over the 4th. And that was kind of my final comment for this month's edition, is that both silver and gold could go lower. There's a lot of talk or a lot of commentary around Basel III. I did a video for our premium service, our paid service. I took into account a lot of things, but there was an article that's now on the Metropole Cafe. It's also at King World News, and a gentleman from Matterhorn wrote it, and he's pretty much spot on the way I understand it, reading it a couple times. a lot of deleveraging has taken place. In the gold market on the COMEX, it's gone from, pick a number, Jeff Christian has stated years ago at the CFTC hearing, about 100 to 1. And we're at a level like 3 to 1 right now. So having seen this coming, usually the future is known by the insiders and markets react, and they have. I mean, there's been a huge deleveraging in the gold, at least on the COMEX. We don't know what it is on the over-the-counter markets because they're opaque. We can't see them unless we are true insiders on what the bullion banks are doing on the over-the-counter market. But nonetheless, I do think that there's not going to be a whole lot about the Basel III. If you're interested, you can read those articles. I find this to be a rather interesting article. It's from the Wall Street Journal, and it's called When the U.S. Gave Up Gold. Talks about 50 years ago, next month, a secret meeting. It was August 15th, 1971. President Richard Nixon and his top advisors decided to take the U.S. off the gold standard. The dramatic move announced by the president upon his return from the White House on August 15th, 71, and I did have the date right, suspended the most fundamental rules of the international monetary system. Let that sink in a little bit. We basically reneged on a contract with the rest of the world. That's what the U.S. did. And I'll just leave that comment alone. Nixon's decision overturned arrangements created by the United States and its wartime allies in 1944 at Bretton Woods, New Hampshire, where Washington had agreed to exchange dollars for gold at a rate of $35 per ounce. Making the dollar convertible into gold and pegging every other currency to dollars at a fixed rate was meant to inject stability into international commerce, which for a long time it did. The dollar gold leak was credible because Uncle Sam owned most of the world's gold after the war, and because American leaders publicly stressed a commitment to the agreement. In 1963, for example, President John F. Kennedy told Congress that this nation will maintain the dollar as good as gold, the foundation stone of the free world's trade and payment system. Well, we know what happened. This article from CNBC speaks for itself. The U.S. deficit will total $3 trillion in fiscal 2021, budget panel says. So we're hitting nearly a $30 trillion official debt, not counting the $20 trillion or more that Professor Sizemore and Catherine Austin Fitts have proven. Sizemore did the analysis, and Catherine Austin Fitts has made it public several times. So it's really a $50 trillion, but we'll call it the 30 official number. So you're adding 10% onto the budget, and that's what's stated now. Wouldn't surprise me if it actually went above that. And I think I'll finish with this one. This is on Yahoo Finance. It's a Bloomberg article. Alexandra Harris talks about the Treasury bill supply cuts loom as the U.S. debt ceiling sets to return. It's all about the debt limit, which has been overrun year over year over year over year over year over year. I mean, it really did no good to pass this act into law saying that you can only have such and such as your debt. There's a limit to how much debt that the United States can go into, borrowing money from the private banking consortium called the Federal Reserve. So you can read the article. It says to read more, Congress lacks clear plan to raise debt limit ahead of the deadline. Well, I think we hear that every time. And guess what? Those Congress critters vote and they increase the debt limit. What a surprise. I wouldn't expect anything different this time, no matter how interesting the story may sound. Well, I'm trying to have a little humor here on this weekly perspective, and I try to end with something from Wall Street Silver on the Reddit forum, and I scroll through quite a few and try to find one that I like. I'm not trying to play favorites, but I will say some very interesting posts on the Reddit site, and it's hard to choose one, but I decided to pick this one this week. Dad, how did you get so rich? I realized that the financial system was a Ponzi scheme. I made a big bet on silver while everybody else called me crazy. And the son's down there saying, frickin' legend. Really hasn't happened yet, as I said earlier in this weekly perspective. Gold's had an annual rate of return, compounded annual rate of return 10%, still around 9%. So certainly from the time the bull market started, nothing to sneeze at. But the explosion that everybody expects has not taken place. So I'll leave it there. Wish everyone the best always. I'll be back next week with another weekly perspective. This is David Morgan of themorganreport.com.